All right, everyone, welcome back to another episode. Today is an interview with Marc Bhargava. Sorry, Marc Bhargava. Am I pronouncing that correctly?
Yeah, that's right.
And Marc is the founder, one of the three founders of Tagomi. And Marc and I got to meet last week, really fascinated by the company when you guys announced that you had raised money recently. Was that the recent press that came out around Tagomi?
Yeah, that's right. So we recently had a financing round that was only open to clients on the platform. So it's very exciting to have folks who have been onboarding or using us, investing in the company as well, and helping us to make a better product.
Yeah. So Tagomi, a couple of taglines I've heard is a startup that bills itself as crypto's answer to Wall Street's prime brokerages. How would you describe what Tagomi does to somebody who has fairly basic knowledge of the finance world?
Yeah, totally. So I can describe first kind of what a brokerage is and the context there, and then the sort of two pieces that make us a really unique brokerage, which is the agency model that we use with our clients and also the electronic model that we use. So a brokerage is really a one-stop shop. So if you're a larger, more sophisticated trading fund or family office, you might not want to deal with multiple market participants at the same time and have to stitch that all together. So in the traditional equities world, you would go to a brokerage, and the brokerage's, role is really to be able to put together a lot of different firms and services and be the one counterparty you face off with to do all sorts of things from trading to lending to shorting. And so, that's the brokerage model. It sits on top of the market participants, and it hasn't really existed in crypto. But in 2017, my co-founder Jennifer and I got a lot of requests for a company like this. I can definitely tell more of the story there. But to answer the question, the first part is we're a brokerage. The second part is we're electronic and agency. So electronic means that we connect to all of these exchanges, market makers, custodians, banks. We connect to all of them electronically. And that's important because when you think about things like routing and being able to go to wherever the best pricing is, you're only going to be able to execute on that if you're connected to folks electronically and can take advantage of better trades or better pricing and algorithms to place those trades. So the technology component is really at the core of what we do. But the agency part of being an electronic agency brokerage is really the ethos of what we do. So agency means we're always your agent. We don't have a balance sheet. We don't trade against you. We don't market make. We do whatever is in the best interest for you in terms of placing a trade in the cryptocurrency space. And, we really stand by that. So after every trade, we generate a post-trade report and show you exactly how a trade was placed. So sort of wrapping those things together, being a brokerage that is always your agent, that's using these high-tech electronic methods of placing trades, the end result is that if you come to us and you're a family office or a crypto fund or anyone really placing trades more than 50,000, the end result is you end up getting a better price, you end up getting the transparency around how your trade was placed, and you end up getting our commitment that we're working as your agent, and that's our model. And so this was really lacking in the space, and it took a while kind of coming out, but my co-founder Jennifer worked over at Union Square Ventures, and I remember I would grab coffee with her sort of every 2 weeks, and sort of in the summer and fall of 2017, we would be grabbing coffee, and she'd be pretty much falling asleep at the table. And I kind of asked her what was up, like is venture that rigorous? And she said no. But, a lot of the LPs and family offices and people in network know that I was an early backer of a lot of really great companies, and I've been in the space. And they've been asking me, how do I place bigger trades? How do I do $1 million Bitcoin trade or a $2 million Ethereum trade? And they're facing all these challenges, hooking up to exchanges individually and having to go through KYC AML and doing selfies multiple times. And when they go to the OTC desks, they don't really understand why there isn't a post-trade report, and I have to explain to them, how it's not the same as the equities world. There's not that rigor. And so I said, if you're already helping all these folks understand how to navigate these crypto markets and you're putting together all of these things, like, why don't we look for a brokerage to invest in? And so that's when Jen and I started actively looking for a brokerage, an electronic agency one specifically to invest in that would copy what 80% of equities in the traditional world uses. And we spent several months looking for that sort of company and just didn't find it. But then we did find someone, and that someone was actually now is our third co-founder, Greg. And so Greg Tusar helped build one of the first electronic trading companies in the 90s, which ended up getting acquired and eventually acquired by Goldman, which he ran for 13 years as the global head of electronic trading. And then after that, he went to help lead KCG, a big market-making fund, which had just been acquired. And so we found this person who had a lot of background and history in this, also in building and selling companies, and himself was now looking really closely at the crypto markets with sort of the same surprise we had. And we sort of shifted. I think it happened at lunch in Union Square. In January, we said, well, why don't we just do this? And so we kind of took that plunge, all quit our jobs, or at least Jen and I quit our jobs that week. And the next week, we flew out to California, got super lucky, got backed by Founders Fund, did a $15 million round with them. It was, just a really great group of folks who themselves had been trading and really understood the space. And, the rest is history.
Got it. Wow, what an awesome story. And did you guys, when you flew out to SF, did you raise money with a simple idea, pitch deck, a basic product, or some money flowing through the system? Where were you guys when you raised that initial round?
We had put together a lot of the parts. So, over the 3 or 4 months that we were sort of searching for this company, we ended up talking to a lot of the players. So, Jen and I flew out to Korea and Japan and met with exchanges out there. We had late night Skype calls with people in Asia, and then really early calls with people in Europe. And we were sort of looking for, have exchanges seen this? Have trading firms seen this? Have other venture folks? So when we flew out to SF, we had a pretty concrete plan in terms of, these are exchanges we have relationships with. These are family offices that have been asking for products like this that we've been helping navigate. And, we sort of in New York got a lot of these family offices really early on to commit as soon as we decided to go first full time. So when we flew out to SF, we had the commitment of family offices who wanted to use the tool and were going to invest. We had a good understanding of, market structure and how the exchanges would respond and where they would be supportive. And so we came, I think, with a pretty clear plan, but we hadn't built anything yet. But I think people definitely looked at Greg's track record of building and selling companies and network and our cumulative network on the sort of network and client side and said, this is a team that can kind of bridge both the crypto side of it, but also at the same time, the institutional side. And my background in the space is I was lucky enough to be a seed investor in Algorand, an early investor in Blockstack, investor in Zeppelin. So, I'd spent a couple years in the space getting to know investors pretty well, doing those deals. Jen had been one of the first investors in Numerai and Polychain and in some of the funds as well, so understood, their structure. So I think people realized that it was a pretty well formulated plan, but, we hadn't executed on it at all yet.
Yeah, but you had all the kindling wood there and certainly the momentum in the right direction. How did you come up with the name Tagomi, or what does Tagomi mean? Is there a history to that word, or it is a nice sounding word?
Oh, thanks. Yeah, so actually, we weren't going to keep the name. We called it Project Tagomi because at the time we were, it was sort of East meets West, and at the same time we were kind of balance between this finance world and this new crypto world. And so that spirit, that ethos was very similar to the character in Man in the High Castle. A guy called Tagomi is one of the protagonists in the book and in the show. And he was very much that. He's a guy from Japan, but a protagonist helping the Americans. He could go between different worlds. And so it was just sort of a project name. So in fact, we called ourselves Project Tagomi as we were putting this all together globally. And then we had 2 failed naming studies. The second one came up with the name Mangrove, which is particularly bad. It sounds like a college dorm or something, maybe a negative phrase for a college dorm. But yeah, and we had the domain. It was $9.99. We kind of bought it when we decided to call ourselves Project Tagomi while we were waiting on coming up with something. And then it just stuck. So, now like we have a crypto kitty in the office. We call it Tago Meow. So, there's sort of all kinds of plays on Tagomi, and it's kind of become, a name we really enjoy.
That's awesome. That's awesome. So now you are. When was that initial fundraise? How far away from that are we now?
Yeah. So that was 13 months ago. That was in January of 2018. And then basically a year later, we launched. So we launched in December after 3 months of rigorous testing, and we started onboarding clients. And as we onboarded clients, many of them said, "This is really cool. Like, this platform looks great. I love how it routes my trades electronically. I don't need to call anybody. You guys are never the bet. You're going to wherever the price is best. You're giving me post-trade reports. Like, this is a really cool end-to-end solution where I don't have to have multiple custodians and banks and exchanges. You guys are doing all of this and it's packaged together. This is really cool. I want to use this more. I want to suggest features. I want to be really hands-on with you guys." And we love that. And we still had over half the money we had raised left. But they said, if we're going to be doing all this work and, really partners in this and not just clients, we want to be investors. And so that was super cool and humbling. So we went back to Founders Fund and our other early investors like Collaborative Fund. And we got the feedback that, we could open up a note and do a financing for clients. And, Paradigm ended up leading that round. We were super excited to partner with them. Obviously, Fred has been in the industry through Coinbase for a long time. Matt's been in the industry through Sequoia a long time. And Charlie was actually an angel investor of ours from the first round. So, it was great them coming in, being a major client and a major investor. But we also got a lot of support from other folks. So, especially folks like Pantera and Multicoin and CoVentures, the Bailey family behind Cambridge Associates. So it was a really great group of people who were already invested in us by trading with us, are, now really hands-on, giving us feedback and thinking about how do we lend out coin, how do we do staking, how do we do shorting, all these new feature requests and helping us organize it. So it's just, I think, a real unique advantage at Tagomi is we're building alongside, our ideal clients, and that's super fun.
That's really interesting to go and raise money from effectively your customers. Had you thought about or contemplated doing a ICO or building a crypto-specific pathway to raising money, or was that just not a necessary step, and just going out and raising traditional convertible notes is just a better path to pursue there?
For us here, I think, really having the client aligned with us, and this was a nice way to do it, and certain clients are going to be more hands-on, like Paradigm, so we were able to kind of adjust for that, which was really nice. I think also, the first user we ever had on our platform was a RIA, who had never bought any sort of crypto and decided to buy a little bit of Bitcoin. And so we also have folks like that, who I think will take some time before they're kind of comfortable with the idea of, essentially an operating company as opposed to a distributed protocol that needs a token governance, right? Having like an operating company issue a token like that. So I think for, tokenization makes sense, especially at the protocol level, even at the app level in some cases. And then, of course, as you start thinking about real assets being tokenized, I'm just not sure like our company is, the best application of that quite yet. And this was a way to, make sure we could kind of figure out which clients wanted to be more hands-on and, they could buy more equity and they could have ownership and rights. And those things were important to them at this stage.
Yeah, that's interesting. What do you think now is the general trend? So just strictly from a price perspective, Bitcoin is now settled at around just under 4,000 for a while from a major, downturn last year. How have you seen the behind the scenes traders? Because I feel like there's really, tell me if you disagree with me, but there's sort of two major different categories of traders: people who are using Bitcoin on a day-to-day basis, but maybe more so they're just independently putting some percentage of their individual bank account into that. Maybe $1,000 to $10,000, something significant for the average person, but also an independent decision. And then there is the family funds and the much larger day traders who are trading, like you said, $1 million or $2 million trades. Have you seen those larger trades, those larger funds start to change directions in any notable way over the last 6 months or year? Are they, or even now as it is, are they carrying certain attitudes about how they look at the market, or any insight from actually seeing and interacting with so many of those folks?
Yeah, so we're a brokerage service, so you can both buy and sell on the platform, and of course there are many different digital assets. And so, our services is pretty useful for just thinking about growing the market in general, not necessarily a certain direction or certain pricing. We handle all sorts of directions and pricings and are that layer in that brokerage service. I think we've been surprised at how different the types of people interested in crypto and who are trading Bitcoin are. So you kind of have, people who've been in the ecosystem for a really long time deciding, I want to buy a little bit more because it's low, but then you have an equal number in many cases saying, okay, I'm helping support another project, or I've moved into angel investing, and so I need to liquidate. So you kind of have those sort of early adopters as one group. Certainly the rise of the crypto fund. I think right now, if you look at endowments or pension funds or large family offices, most of their exposure to crypto is either through venture capital firms, or if they want it more directly to tokens, through crypto funds. And so you see a lot of that capital there. So like our lead investor Paradigm, one of their large prominent investors is Yale's endowment. And so there's a lot more interest in the space, but it is being funneled a little bit more, I think, towards the crypto funds. On the other hand, you do have some family offices. Obviously, the Bailey family thinking very progressively around this. Cambridge Associates making a report that folks should look at, at least look at the digital asset class and think about how they're getting exposure. So really in the research phase, but some of the families behind these organizations themselves are a little bit more bought in, or members of the family are bought in. And so you have that group as well. And then you do have people who are more, doing the quant-like trading, taking a look at arbitrage, but more market making and, really kind of more high frequency as it approaches that. So there are a bunch of different groups. And so what Tagomi does is, at the heart of us, we're an engineering based company. And so we're always building new products and features. So we have an API product for some groups that can get programmatic access to our aggregated liquidity and settlement and treasury functions. We have an advanced trader screen that's in beta right now with a few of our early clients and investors. And so it's really cool to be getting this advanced trader feedback. And then we actually have a more portfolio institution looking product that most of our family offices and crypto funds are on. So we, out of the gate, kind of realized that there are a lot of different needs, and they all have the same liquidity need, settlement need, but the way they trade and the way you want a platform to interact with each group is different. And so we've customized, different models against those three groups.
Interesting. What do you think? What's your best guess as to just a percentage of people who are using cryptocurrency for something other than trying to make money on cryptocurrency? Using it because it's somehow better than the alternative way to send or store money. What would you guess that percentage is?
Yeah, I think that percent today is on the lower side. So I think where the innovation is going on right now is more at the early protocol stage and what's being built right on top of that. So, I'm excited about improvements going on with Bitcoin or off-chain there. I'm excited about just all the different things going on with Ethereum right now and the people building on top of it. And then there are also new protocol systems like, either Algorand, which is launching soon, Dfinity, which seems to be making a lot of progress. Cosmos obviously came out last week. So I think in terms of use cases, it's sort of like these earlier layer protocols need to be improved. And I think people understand that in the community. But Bitcoin is a star of value. And then, of course, the tokens associated with many of these smart contracts are all very early, but very interesting bets at the same time. And so I think partially people are making that bet on price direction. And then the use cases are more to come in the future. I think the current use cases that you're kind of alluding to is like store of value or payments. I think that's even more powerful outside the US. And people are also just holding it as a hedge, right? So one of the reasons that RIA made the trade was, they really believe in looking for uncorrelated assets and, have identified Bitcoin as that. And so they, placed a gold trade, but also placed a Bitcoin trade. And so it was nice to see that story actually playing out. And I think part of that is because pricing is more reasonable now in crypto. So that's a smaller use case, the sort of payments use case for sure. But I think the store of value use case is a pretty big one. And then I think it will be, one of many big ones as you see smart contract systems become more scalable and, really see that change.
Do you think there's a risk of, one of the things I've been thinking about is if you say it was a low number, would you say greater than or less than 10%?
I think
is
greater
actually
than
being used.
10%. Yeah.
So somewhere slightly greater than 10%. Do you agree with the notion that if there's a certain percentage of crypto, say just take Bitcoin for example, that is locked up with people who maintain a very long hold view, say multiple years, and a very small percentage of the Bitcoin is actually being transferred between people who are benefiting from it on a day-to-day basis. That in some ways is parallel to what happened with the gold dollar. There was a gold, silver or gold dollar that was in circulation. Everyone saved it because they thought it was going to be worth more than $1 in the future. No one used it. They stopped printing it, and then it was just, and it was a kind of a total failure. And I think the same may have been true with the $2 bill. Where everyone was saving it, anticipating it being worth something more. And when everyone saves something and no one actually uses it, there's no driving force to increase value. Do you think that is a potential risk for Bitcoin?
For Bitcoin, less so. So I think obviously gold is still accepted as a medium of exchange. It has that mystical story. It's universally accepted. And I think Bitcoin is an improvement on it in many ways in how you limit the amount. You can actually build on it. It's obviously easier to store. So I think Bitcoin as sort of an analogy to gold is pretty fair. But what you're getting at, I think, is a huge issue for a lot of other currencies that'll come out, which is two questions, one around governance and another around distribution. So, if you have new smart contract systems and you issue tokens or it's a foundation and you don't have distribution, it's in the hands of a few, how do you get developers incentivized to be building it? And how do you reward those developers for building the ecosystem and making the platform scalable and making apps on top of it? So I do think for a lot of smart contract systems and other currencies, other tokens, it is a huge challenge because you want to be able to incentivize people, you want to have more distribution, and you want the people building the community, not just the early adopters, to get the reward for what they're doing. And that's ultimately the only way you get something to be scalable and to have apps on top of it. So I think when and I've talked to a lot of projects in the space who, both when I was on the investing side and now at Tagomi, as we think about, we make recommendations of maybe where should you list on exchanges or how do you think about interacting with market makers. We give, a lot of projects sort of very informal advice about market structure. And I think those are the two challenges. It's, how do you incentivize the people who are building, and how do you make sure you get your token or currency in the hands of many folks so they either use it or are incentivized to keep building on it. And I think that is probably the biggest structural question in this market today. And there are definitely different projects taking different approaches, and it's just going to be a lot of experimentation there.
Yeah. What would you say is your most contrarian view on crypto?
Oh, wow. I think this is less contrarian now, but, I think we're in the maybe very beginning of the second inning. So it's just very early. I think on both, I sort of sit on both sides because I spent a lot of time with like really large wealth managers or banks, and they're just so far away, in my opinion, from really adopting this in stride or understanding it. And then at the other end, I talk to people who've been, co-investors with me and investing in the space for a long time. And they are under the impression like, everything about modern finance is going to be changed. And it just always, so many of my conversations, I feel like a contrarian, but I come out somewhere in the middle, which is, this is the second inning and most things today will be churned through. But at the same time, like, it's almost like I think like the cell phone is the best analogy. Like if you were to conceptually describe the cell phone to someone where you could walk around and talk to people and call them, I think we'd all agree that's like a really great idea in the 1970s. But then how do you implement it? And, the early implementations of the cell phone, you look like kind of an idiot carrying around this huge box, and it's really dumb. So I think smart contracts are just very conceptually a good idea to cut out the middleman, to allow for really fast, smart settlement between different parties, not have these big legal and financial institutions in between. But then how do you actually do it? But I think the cool thing about something like cell phones, and you look at their adoption in China, for example, in a 5 or 10 year period, the landscape just totally changed, even in a 5-year period. And so I kind of, maybe this is contrarian, maybe not, but I see a lot of sort of flatness and then a short period of time where you hit that technology inflection, and then it becomes really widely adopted. And I think especially in places like China and India, where financial systems are not as strong, legal systems are not as strong. Like when that technology inflection point happens, similar to how you had mobile banking in China all of a sudden out of nowhere, I think you're going to see, the same sort of cell phone, mobile banking adoption. It'll just happen really much faster out there. And so we try to spend more time out there. We have a lot of investors there as well. And so I think, that's one of the contrarian views, that maybe it's going to add more value in parts of the world that are not San Francisco or not New York.
Do you think that governmental regulation is overrated or underrated in terms of its impact that it could have to stifle innovation for a long time and potentially put crypto in the dark ages? Or do you think that that's an overrated concern?
Yeah, it's just so nuanced. So like, at Tagomi, we, on a state-by-state basis, interact with regulators. We can now operate in 19 states because of our various MTL licenses. And it's just very different. Certain states are like, sign up here, and other states have really, really long processes that could be streamlined or at least could be standardized. And so it's just very much based on the nuance of where you're talking about. I think one example of a place that is pretty interesting is like the UK. The FCA there has been doing a lot of lunch and learns and talking to companies in the space. And so it's just by geography, by state, by nationality, it's all so different. So it's really hard to give a statement on, regulation, because it's super nuanced to, in which state and which country. Because there are, I think, certain ones that could benefit from more, to be honest, and protecting consumers, and there's others that could benefit from it being more streamlined and not seeing it as a threat, but something that could really help push people's lives forward.
Yeah, it's interesting. Which country would you view as having the greatest need for crypto, say, is most likely to adopt it in a major way and potentially leapfrog ahead to financial world of the future?
I think Latin America and Asia, for kind of two different reasons. So I think in Asia, there's been just, incredible growth in the economy there, in the adoption of technology. In some ways, they're ahead of the United States. I go to Korea sometimes and see that. But they're certainly not ahead in legal and financial. And we still have, really much stronger institutions, in my opinion, in those two spaces. So I think smart contract technology in Asia has a huge benefit for tech-savvy people who might be missing that piece of it. And then I think in South America, it's more, the store of value case, being able to preserve your wealth against differences in governments and inflation, and kind of crazy monetary policies. And so I think in Latin America, it's the store of value case, the payment case is really interesting. So I think in both of those places, you could see as the technology improves and the infrastructure layers get better, and there's so many like really great people working on that and a lot of venture funding there too, that those two markets are certainly ones to watch and ones we want to get more exposure to.
Yeah. Which startup opportunity or which problem is out there that you would solve if you weren't working on Tagomi, or you would maybe highlight as an opportunity, call for startup? Is there one or more problems you see that aren't being appropriately addressed that you think more resources should go to, and there's opportunity for startups to evolve?
Yeah, so my answer is just going to be so Tagomi oriented because I'm just 24/7 kind of demoing the product and talking to people, and it's a blast, but you don't really get to pull up very much from doing that. But in doing so, one thing I've identified is the whole KYC AML process would be really nice if that was standardized. Like, if one company, like let's say Goldman Sachs, KYC AML with your family office or you as an individual or whomever, and they had a really rigorous process, couldn't that count for another place? So certain things like that, or, so for us, it's just a lot of these processes, I think, just standardizing them. It's interesting to see how different firms have different processes, different states, different governments. I think just, and part of that is, hopefully what smart contracts can also address is really you can have your own online identity and it can protect your data and you can kind of share it So I think like people are working on that. They know it. It's not a super novel idea, but really being able to own your data and interact with people in some hybrid way where you can maintain your privacy and at the same time they can feel comfortable knowing who you are. I think there's going to be this world where you'll have these hybrid platforms where you still own some of your data, but the other party can see the rest to get comfortable with who you are. And so that standardization and that hybridization of data, I think, would be a really cool technology to work on.
Yeah, there does seem to be a few product market fits for blockchain technology, architecture, and identity is absolutely one of them, where you have your ability to access information and then your ability to transfer information to other people in a way that's completely decentralized and trusted is a major problem. I mean, it's difficult to compare the two, but identity is just such a large problem to solve that every country internationally, every country maintains their own database and multiple databases of identity that if one were to solve that in even like a small corner of the world, that would be a huge improvement. Cool. Any last thoughts, any words of wisdom you'd like to pass on, non-Tagomi related to, say, early crypto investors or folks who are just interested in the space or maybe working in the space, investing in the space? Anything that you've seen that you think most other people don't have access to, see, and you feel is a unique vantage point?
Yeah, I think that a lot more people are building now than they were in 2017, and I think that's like a really good thing. The other people I meet, in the community, everybody's really talking about what they're building, and that's sort of like the intro line. And I remember in 2017, the intro line is like, "What are you investing in, and what's the new ICO?"
Right.
So I think that's really cool. And I think the manifestation of that will be really interesting tokens and governance methods for, protocol systems. And it'll be, the digitalization of real assets, and it will be actual consumer apps with utility tokens. And it'll be all of those digital assets that we want on Tagomi, that we want to list, that we want to have a broader sphere and give access to investors to in a transparent way. So it's super heartening and exciting. And I think it's actually like a really good time to join the space and to talk to people and to have a great community. So, if folks are interested and are on the fence, I think, and are trying to time things, I would just say don't do that. I would jump in now and at least on the side of building the infrastructure.
Yeah, awesome. Marc, if people wanted to reach you, where would they reach out? Email or Twitter, LinkedIn? Yep.
Yeah, feel free to email me. I'm Marc, M-A-R-C, at tagomi.com, Tagomi, T-A-G-O-M-I. So yeah, feel free to email if you think you'd be a good user of the product, and especially a vocal one with a lot of feedback. Just send me an email and we'll set up a demo.
Awesome, Marc. Well, I really enjoyed talking with you, and congrats on all the progress, and look forward to hearing more.
Yeah, you too, Michael. Thank you so much for having me.
All right, cheers.
Take care. Bye.
Bye-bye.
The views and opinions expressed on any program are those of the hosts, co-hosts, and guests appearing on the show and do not necessarily reflect the view of the owners and producers of the show. Paid advertisements in form of audio announcements may appear throughout the show, including this one. Advertising can also include print and other digital formats. The owners and producers of Around the Coin do not endorse or evaluate the advertised product, service, or company, nor any of the claims made by the advertisement. All programs are subject to a one-time charge for professional editing fees, for which the interviewing guest or guests may have contributed towards. The owners, producers, hosts, co-hosts, and guests on the show are not financial advisors. Any investment advice or opinions cited during the show is for information purposes only. None of the content is intended to be investment advice. Seek a duly licensed professional for investment advice. If you believe there's been any violation of your copyright, trademark, service mark, or any other type of intellectual property, please inform us in writing by sending an email to legal@aroundthecoin.com.